This is Dave with the SPY Super System live trading room and the alert service. Tonight we're going to basically a video on using the SPY Super System software with what we call the SPY Super System methodology to trade intraday trades. These will be on basically 5-minute candlesticks. Most of these will be fairly quick trades. I want to go over the strategies that you can use to do this very successfully. It's being used by a lot of folks in the room now very successfully and has a very high win rate. And I'm going to go over the details of how we do this. And I'm going to try to look at some specific setups and all the indicators we use and how to use them. So thanks very much for listening to the video, and we'll get started. Again, this is SPY Super Systems Options Live Trading Room, SPY Super System Intraday Trading. Okay, this is for intraday trades. First thing I have to do, of course, is the usual disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors. Okay, this is, by the way, just a graphic of the alert service. I have an alert service where we send out very high probability trades setups by SMS text alerts to your phone, where you can take a lot of the same trades we take in the room without actually being in the room. Okay, so let's just talk a little bit about the room and the alert service and the rules we trade by. We have a couple, trade the best and skip the rest. This is how we'll be trying to find the very best trade setups. We do it for swings and for intraday trades, but tonight we're going to be talking about intraday trades. And the second thing is our objective is not to make trades. Our objective is to make money. This is meant to have traders focus on the fact that you only want to make the very high probabilities trade setups you can find, not just to take a trade, just to be in a trade. Again, many times no trade is the best trade. So again, our objective is not to make trades. Our objective is to make money. And as a profitable trader, a retail trader, we need an edge over the other retail traders. We have 4. The SPY Super System software that we're going to be showing you, that we use that to do these what's called the SPY Super System methodology trades. Also, we look for stocks with relative strength and relative weakness. That means not RSI. That means how is the stock trading in relationship to the SPYs or the Qs, one of the indexes. If the stock is moving up, stacking green candles, and the SPY is moving sideways or down, it's got relative strength, and vice versa on relative weakness. This gives us an additional edge on any trades we take, as the trade will typically outperform the SPY or the Qs, and it won't go against you so bad if the market turns around. And we trade with market trend if there is one. And fourth, we buy near support and sell near resistance. You don't want to be chasing stocks. You want to be looking for an entry at a support or resistance level. And this is going to be a fairly critical point tonight that we're going to talk about on the SPY Super System intraday trades, because buying near support and selling near resistance is critical. And I'm going to go over the exact support and resistance levels that we use and how to use them. Okay, topics to be covered tonight. We're going to talk about the SPY Super System indicators. We're going to talk about how to find relative strength and relative weakness. We already chatted about that briefly. Basically, just a stock that's outperforming the SPY or the Qs to the upside or to the downside. Technical charts tell a story. It's very important to look at the context of the chart that you're trading. On a 5-minute chart, you're just going to be looking at what it's been doing today. On a swing trade, of course, you'd be looking at daily charts. Finding and using support and resistance. Again, we're going to focus on that. And again, algos have taken over the market. Let's join them. How algos take money from retail traders. Algos are what the institutional traders or the institutional environments, institutional businesses such as Morgan Stanley, JP Morgan, all of the investment banks, all the hedge funds, all the pension funds, and a lot of mutual funds. They basically use algos, or computerized programs, to do their trades, not so much with people. And these algos, by the way, can identify news, and they can trade off of news. They also can trade by having an algo that identifies how retail traders trade. A lot of, if you trade MACDs or something like that, they know that they can set the trade up to make the MACD look like it says crossing and get the retail traders in and then flush it right back down again. So that's how algos have taken over the market. They've been a lot more. There's a lot more common now. About 85% of all the trades that take place in the market right now are algos. Okay, briefly, I'm going to just talk about what moves the market. And this is whether you're doing daily charts, 5-minute charts, but this is what moves the market. Most of us there are retail traders. I am. Most everybody I think who's listening to this is a retail trader with these little marbles. Important to understand that we as retail traders cannot move the market. We have no ability to move the market at all, right? These are the institutions. This is the investment banks, Goldman Sachs, JP Morgan Chase, Morgan Stanley, etc. All of the investment banks. It's also hedge funds. It's also pension funds. It's also mutual funds. This is where the market is moved. These are the folks that move the market. Now they can be trading against each other sometimes, which means they're not really moving the market. You're getting a lot of chop. But once we identify when a group of institutions are all trading in the same direction, that's what we want to know. That's what we want to follow. If the institutions are not in a trade right now with any force, then all you're doing is trading against other retail traders. You don't want to be trading. You just get chopped and chaos when retail traders are the only ones in there trying to trade. I mean, the institutions may be trading against each other, but once the institutions line up and all take a trade in or an index in one direction, that's what we want to know about it. That's what the SPY super system does, and that's how we can become profitable and take money from other retail traders who have no clue about whether the institutions are in the trade or not, and they don't have the SPY super system. They can't identify any of these trades, right? So that's really important. That's what moves the market. That's what we're trying to do. We're trying to find what the institutions are doing and join them when they're moving the market. Okay? All right. So again, algos have taken over the market. Let's join them. How algos take money from retail traders. I just mentioned that. Basically, they can identify things such as MACD crossovers, or if you're using RSI, relative strength, Fibonacci's, anything like that. They can have programs that identify those, and they can take advantage of the retail traders. They also can see all of your, if you have hard stops set on your trades, they can see when there's an awful lot of traders that have a hard stop set at one spot, they'll flush it below it and then bounce it right back up again. If you've ever put hard stops on your trades, you probably have been surprised that the stop will get taken out and then immediately the market reverses back in the other direction if you'd only stayed in for a little bit longer. I don't use hard stops. I'm just using technicals. When I see a stock that's getting close to my what would be considered where I'm going to take an exit on it because it's I'm losing or it's going below my technicals, I'm going to put an alert on there, but I'm not going to have any hard stops built into it. I'll manually trade, but I'm not going to have hard stops. Okay, and that's how they take money from retail traders. One thing to identify that how these algos work. If you look at a news event such as a jobs report or the FOMC, when the Fed comes out on Wednesday at 2 o'clock in the afternoon on Fed day, you'll notice if you watch the volume on the SPY or the Qs, that at 2 o'clock in about 1 millisecond, all of a sudden there'll be this big, huge burst of volume, either pushing the stock, the indexes up, or pushing them down, or pushing them up, and then pushing them down. That's all algos. There's no way for a human to even click a mouse that quickly. So that shows you where this is coming from. They're reading the news, they can see it, they immediately react to it, right? So that's how algos are taking money from retail traders. And again, about 85% of all the trades are algos, and our job is to find out when they're trading in conjunction with each other. All right, the Compass system, which is now called the SPY super system, I just want to briefly talk about it. It identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed, such as trades that look like they're tracking up, but the institutions aren't pushing them. It does this by identifying when the institutions are driving the move and when they're not. And this is what we look for. And it analyzes complex trading data and displays the results in easily identifiable visual format. It does this on 5-minute chart. It does it on 15-minute charts. It does it on daily charts. But we're going to be interested tonight in the 5-minute chart, how we can intraday trade SPYs, Qs, IWM, or any stocks. And again, the visual element makes this possible for even new traders to find high probability trades. When you see these charts, you'll see how easy it is to identify when the institutions are in the trade. Okay, now the indicators that we're going to be looking at tonight on the SPY super system, and these are used for the SPY super system intraday trades. The indexes we'll be trading the SPY, the Qs, the IWM. You can also trade the futures. You can trade the ES, the NQ, any of the futures that you want to, and any stocks. You can trade any stocks if you can find some that line up the way you want them to. So this doesn't just apply for indexes, but it's also for stocks. And obviously you can do it for commodities, etc. You can do it on gold, you can do it on silver, you can do it on oil. Now the thing here is we're going to take a look at the current time frame momentum. This is the indicator that's the critical indicator for doing SPY super system trades on a 5-minute basis. It's called the current time frame momentum. It's going to be operating on a 5-minute basis, and you're going to be looking for color changes to let you know whether the institutions are coming in, going out, or going from bullish to bearish or bearish to bullish. Now, one of the other levels that's on the chart that we'll talk about is the VWAP. This is called the volume weighted average price. This is a critical important support and resistance level. All the institutions have the VWAP on their charts. They know exactly where they are. They do a lot of buying and selling there. So when a price is above the VWAP for longs and below the VWAP for shorts. Again, you don't want to be trading long if the price is below the VWAP. The institutions are likely going to be shorting it when it gets back up there again. So VWAP, very important support resistance level. We're also going to be showing the 8 EMA support resistance levels, and we're going to use it in conjunction with the 15 EMA. I'm going to spend quite a bit of time talking about these two indexes, indicators. The 8 exponential moving average, it's a support and resistance level. We use it in conjunction with the 15 EMA, which is a smooth EMA. It's 15 EMA of an EMA. This is one of the support resistance levels that we can use, and I'll show you how we use it in conjunction with the 8. And then there's a pivot point. This is a white line that the SPY super system puts on the chart, and it is just what it is. It's what it says. It's a pivot point, and it's another support resistance level. It's not something we typically trade off of, but it's something we want to be aware of. If a stock is getting close to it, it's about time to take profits if it gets near the pivot point. And so these are the indicators that we're going to be looking at. We're going to use these in conjunction to find the trades. And it seems confusing, but it's not. This is going to be fairly simple. Now, one of the things I want to talk about here is this. We were talking about current time frame momentum. Momentum is a critical in determining if institutions are in the trade. Now, one thing I want to talk about here is many traders misunderstand what constitutes momentum. Some people think that if you're just stacking green candles, the stock's got momentum. It's kind of like stepping on the gas when the car is moving forward. That's momentum. That's really not momentum. Right? Momentum is it's actually determined a little differently. What you've got is, if you're looking at, let's say these are 5-minute candles. Here's the open of the candle, here's the high of the candle, here's the close of the candle. The close is the blue. Momentum is determined to a bullish side as the high of the close. The close of the candle is getting closer to the high of the candle. See how this one is here? The next one gets closer to the high of the candle. Next one gets closer to the high of the candle. Next one gets closer to the high of the candle. That indicates momentum. Now the price doesn't even have to be going up that much. It can be going sideways, but the price can be on each candlestick can be getting closer to the high of that candle. So that's how you determine momentum. That's what we're looking at. And the same thing to the downside, obviously. The close of the candle gets closer and closer to the low of the candle. That is momentum. So that's when we look at the current time frame momentum. That's what we're going to be looking at. That's what it's indicating. Okay. All right. So this is the graphic here on the SPY super system. We're going to look at some live charts as well. But this is the SPY super system software. Okay. And this is what we're going to use to do our intraday trades. Right. A few things on here. Here's the current time frame momentum right here. This is the one we're going to focus on. This is the actual oscillator. It's modified. This is a Laguerre oscillator that has the divergence pulled out of it. It's just trading on pure momentum. Most oscillators have divergence in there. It really kind of skews the oscillators. This is telling us what is the current time frame momentum on the 5-minute chart. This is multi-time frame. This is the long-term trend. We don't really use these on the intraday trades. These are much more useful for swing trades. But for what we're going to be looking at tonight, we're going to be looking at the current time frame momentum. Now up here in the pricing area, this is where our indicators are, where our moving averages are, right? And I've got them identified. This is the 8 exponential moving average, this white line right here. That's 8 exponential. This is the 15 exponential right here, the green line. These are the two that we're going to use in conjunction with each other, right? The 8 and the 15. This is the VWAP. The pink line here is the VWAP, another critical level, right? So those are the 3 levels, the 3 indicators are the 3 averages we're going to use. VWAP, 8, 15, and 8. That's all we need to do this. Now, also in the software, it's going to produce these little, what's called pop signals. These are pop out of the box signals. These tell you that a stock is breaking out of compression to the upside if it's pink, to the downside if it's blue, right? And we can use them to identify when to get into trades if everything else is equal. And we're going to talk about exactly how we look for these each on a 5-minute chart. We also have something here called the VOLD, VOLD. This is a market internals indicator that tells us if the overall market, not the stock we're looking at now, but this is looking at all the New York Stock Exchange stocks, and it's determining whether there's more volume to the upside or more volume to the downside. All the stocks moving up, you take their volume, you subtract all the volume from the stocks moving down, you come up with a trend. It goes basically you have green is bullish, blue is a bullish trend, yellow is a bearish trend to the downside, and red is a bearish trend. And I'll go over those colors in just a minute. But here's what it looks like. This is how we're going to make trades for the SPY super system on intraday basis. Okay, now for looking at the SPY super system, and this is what I call the SPY super system methodology. Right? We're using the SPY super system software to do our SPY super system methodologies. So this is the setup criteria for indexes or stocks. Right? This is what we're gonna look for when we're trying to trade a stock or an index. Right? On the index side, if you want to trade the strongest index on an up day and trade the weakest index on a down day, it's just a starting point. If you have an up day and you're looking at the Qs or the SPY or the IWM, you want to trade the strongest one as long as it's not too close to a resistance level. Trade stocks with relative strength or weakness. So if you're trading long, you try to find stocks that have relative weakness for the SPY, and then you find your entry level for those. So that's what we're looking for on a bullish day of these things. You're going to enter the trade when the current momentum indicator changes from red or yellow to blue or green for a long, right? It's going from red or yellow, which is bearish, to blue or green, which is bullish. And this indicates that the institutions are switching from bullish to bearish to bullish, right? So for long, that's what we're looking for. You enter when the current momentum indicator changes from blue or green to yellow or red for a short, just exactly the opposite, right? You're looking for a color change from bullish to bearish. If you're going long, the index or the stock should be up for the day. Typically, you're going to have a higher win rate if you take a stock or an index long. If you're going long, it should be green for the day. In other words, you want to be trying to trade with the trend for that day. If you're going short, the index or stock should be down for the day. It should be red. You're trading in the direction of the trend for that stock. And the stock price should be above the VWAP for a long and below the VWAP for a short, unless there's enough room to the VWAP to justify a trade. In other words, if the stock prices drop down below the VWAP and it turns around and starts to head up again, especially if it's green for the day and you've got enough room between the current price and the VWAP, you can trade that. You can trade that for a long, and you just have to be cautious when the price starts getting close to the VWAP because it may stop there. Right, so that's the SPY super system setup for indexes and stocks. Okay, now for the indexes and the stocks, there are 2 high probability trade setups that we're going to talk about. For longs, you take the strongest bullish index or stock with relative strength. The price should be moving up through the VWAP or bouncing off the VWAP. In other words, coming down to the VWAP and bouncing back into the original trend after a pullback. Right, we're going to look at charts. They're going to show this. Price moving up through the VWAP or bouncing off the VWAP after a pullback. The current momentum indicator must be blue or green. Okay, for long, it's got to be blue or green. The second method this is the VWAP. Second one is the strongest bullish index of stock with relative strength, same as this. Price should be moving up through the 8 exponential moving average, bouncing off the 8 exponential moving average after pullback. Same as the VWAP, except this time we're using the 8 exponential. Or it can be moving up through the 15 EMA or bouncing off the 15 EMA after a pullback, right? And the current momentum indicator must be blue or green. Same as this, except we're using the 8 and or the 15 as our support resistance levels. Here we're using the VWAP. Now notice we're getting in as close to the VWAP or as close to the 8 or the 15 as we can when we take the trade. It's bouncing off of it or it's moving up through it. We're getting in at a very, very close to support resistance level. So if it reverses on us, we have a very minimal loss. This is very important, very important. Okay, the short side is just the exact opposite. You get the 2 high probability trade setups for the short side. You take the weakest bearish index or stock with relative weakness, right? So if the IWM is the weakest index on a down day, you would be looking to trade the IWM. If the SPY is the weakest, you would look to trade the SPY, as long as it doesn't have any support levels too close by. Right? The price should be moving down through the VWAP or bouncing off the VWAP after a move up. Right? Just the opposite of the long. It's coming down through the VWAP or it's coming up to the VWAP and heading back down again. Right? The current momentum indicator must be yellow or red, telling us that the institutions are selling. Or if the stock is away from the VWAP, the price is away from the VWAP. Again, weakest bearish index of stock with relative weakness, price moving down through the 8 EMA or bouncing off the 8 EMA after a move up. Same as we just talked about with the VWAP. Price should be moving down through the 15 EMA or bouncing off the 15 EMA after a move up, either the 8 or the 15. If the price is away from the VWAP, current momentum indicator must be yellow or red. Right? So that's what we're looking for. We're looking for the VWAP, the 15 or the 8 exponential moving average as our support resistance levels. And when we get a move through it or a bounce off of it, that's when we're entering the trade. Okay, very, very critical that we take that as we take the entry as close to those as possible. Okay, now the color codes for the SPY super system indicators: green is very strong bullish, blue is a bullish trend, red is a very strong bearish, and yellow is a bearish trend. These are the colors you're going to see on the chart, on the SPY super system. Again, so the intraday trading using the SPY super system current time frame momentum for 5 minutes indicator for indexes and stocks. Bullish trade, the momentum indicator changes from red or yellow to blue or green. It goes from bearish to bullish, right? It could, when you get into the trade, it could already be bullish if you're going long. But if it's switching from red or yellow to blue or green, you're catching it right when the institutions are just coming in. Stock price is positive for the day. Again, where the stock is green, we're going long. The stock price is above the VWAP off the 5-minute chart, very critical. There should be no nearby resistance, such as a pivot point above it, and higher probability trades will be on bullish trending days. You're going to get bigger moves that last longer on bullish trending days than on choppy days. And then you want to trade stocks with relative strength versus the SPY. This is for a bullish SPY super system trade off the 5-minute chart. Right, intraday trade for the current time frame for bearish trades. Obviously, it's going to be just the opposite. Momentum indicator changes from blue or green, which is bullish, to red or yellow, which is bearish. The stock price is negative for the day. We typically want to trade to the downside if the stock is already red. We're going to have much more likelihood of following the trend as opposed to if it was green. Stock price is below the VWAP on the 5-minute chart. There should be no nearby support, such as a pivot point below there. And the higher probability on a bearish trending day, you're going to get a longer move on a trending day than you would on a choppy day. And then you're going to trade stocks with relative weakness to the SPY. This is the setups that we're going to find these SPY super system trades. And I'm going to show you some on live charts from today so you can actually see it in action. I took several of them today. Okay. So again, here is the SPY super system that we're going to use. This is the software that goes on your Thinkorswim platform. You can buy this software. You can have the same information I've got, and folks who have this have to know where the institutions are in the trade and when they're not. Again, current time frame momentum here. This is what we're focused on. You don't really need to worry about these two. This is what we're focused on for a SPY super system trade. Here's your VWAP. Here's your 8 exponential moving average white and a green exponential moving average green. Okay, EMA 8 is white, green is the 15, and the VWAP is pink. Right, and you've got your pop out of the box symbols again, as we talked about. These are telling you a stock is breaking compression. Okay. Before I get into the showing the some trades, I want to talk about using the 8 and 15 EMA in conjunction with one another, because they both support resistance levels. But these two particular exponential moving averages, I use them in conjunction with each other all the time on a daily chart and on a 15-minute chart, on a 5-minute chart. All right, and the 8 EMA and the 15 EMA combination, it helps to find trend direction and momentum shifts. Okay, this is really important. A bullish trend, when you look at a stock, you'll know it's in a bullish trend. If the 8 EMA is above the 15, the white line needs to be above the green line. Right, if I go back here and look at this, see the white line above the green line? That is a bullish trend right there. When it switches below from the 15 is above the 8, that becomes a bearish trend. All right, so this is how you can tell whether you're in a bullish or a bearish trend. The bearish trend, the 8 EMA will be below the 15 EMA. Just those two levels, that's all you need to know. That's all you need to use. You're going to use these all the time. So this gives you a quick visual for trend confirmation and potential turning points. Right, I think you can see when the 8 crosses down below the 15, you're going from bullish to bearish. It's also a pretty good entry for an entry into a bearish trade. So the bullish setup logic on this. So you'd like the trend confirmation if you're going long. You want the EMA to be above the 15, right? You want this to be a bullish trend. So the 8 EMA should be above the 15 EMA. The market bias is up. That's what that means. You get what's called a pullback opportunity. So if the price pulls back toward or slightly below the 8, all right, sometimes down to all the way to the EMA 15. If the price finds support at the 15 EMA and begins to reverse upward, that's often a signal of a continuation entry opportunity. In other words, the price can go below the 8, but it almost, not always, but very frequently, it'll support at the 15. And if it bounces off the 15 and heads back up again through the 8, this is a very good reversal indicator that you can get long here, all right? It signals a continuation entry opportunity of the original bullish trend. And you can look for confirmation like a bullish candle pattern or a volume uptick to tell you that that's happened. But again, if it pulls down through the 8, a lot of times it'll bounce right off the 8. There you can take the trade there. If it goes down through the 8, it'll a lot of times bounce off the 15. That's where you can get into the trade. So you're using these in conjunction with each other. You're getting a confirmation that you're back in the original trend because it broke through the 8, but it held at the 15 and had it bounce back up again. Okay, the entry trigger, when the price closes back above the 8, and you can do this two ways. You can take it, wait till it gets above the 8 and enter there, or you can take it right on the bounce after the 15, making sure you watch to make sure it clears through the 8. If it doesn't clear through the 8 and heads back down again, you get to get out of the trade. But enter when the price closes back above the EMA is basically a confirmation, and ideally continues through the 15 if it dipped below. Okay, profit taking, if the price stalls or rejects at the 15 EMA, in other words, if the price is coming down or going up and hits the 15 and reverses after move up, that's often a good take profit signal. In other words, the 15 is giving you confirmation that it's either going to support there or it's going to break through there. And it also would indicate a short-term loss of momentum when it starts coming back down. We'll talk about these exactly how we use this. You'll be able to see them on the charts. Okay. Now, using the 8 EMA and the 15 EMA in conjunction with one another on a 5-minute chart, a bearish setup logic. 8 EMA less than the 15 EMA, right? That's bearish. The 8 EMA is below the 15. Market bias is down. You're going to try to do what's called a counter trend rally. The price rises back up toward or just above the 8 EMA, sometimes reaching the 15. It's coming up now from below, but it's at a bearish trade. If the stock fails at the 8 or the 15, it often removes lower. So if it comes up through the 8, it hits the 15, and then turns around and heads back down again, that's telling you it's going back into the original trend. Short entries can be taken near these EMAs with confirmation of rejection, like a bearish candle or a volume spike. And again, if the price breaks back above the 15 EMA, it also signals a shift in momentum, a good time to lock in profits. In other words, if you're in a short trade and the price is coming down through the 15 and gets down to the 8 and then continues on down, that's basically gone bearish again. Okay, so if it breaks back above the 15, goes back up above the 15 when it's heading back up with the 8 below, that tells you that it's likely going to go ahead and turn bullish. You want to get out of the trade. You want to take your profits on the shorts. All right. So that's the 8 using the 15 and 8 in conjunction with each other. Now this is for a bullish long swing trade. Now we're not going to be talking about swing trades tonight, but I wanted to give you this information on using the 8 and 15 together on daily charts, which would be a swing trade. All right, so again, you're going to get the same thing. When the 8 EMA crosses above the 15 or stays above it, it's showing an uptrend. That's a bullish setup. 8 EMA above the 15. This means buyers at control, pullbacks are opportunities to go long. We have what's called a PBO, a pullback opportunity in the room. That's for a stock that's bullish. It comes back, hits the 8 or the 15, bounces back up again. That's a PBO. All right, you're just using the 8 and 15 together. Again, it's buy the dip setup. Wait for the price to pull back toward the 8 or the 15. Look for a reversal candle like a hammer or engulfing or a bullish close near those EMAs. They often act as dynamic support zones. Bounces off of that, get back in it long again. Right, so here's the trigger. Enter when the price closes back above the EMA after pullback. These signal resumption of the uptrend. Right, comes down, hits the 15, bounces back up through the 8. Now you're heading back up again. That's what you want. That's when you want to be getting into the trade. You want to place below the 15 EMA or recent swing low. That will be a stop loss. If it comes back down through the 15 and falls through it on a swing trade, then you want to get out. And I use this all the time on my swing trades. I can have a stock that broke down through the 8, but held at the 15 and then bounced back up again. I'm not going to exit the trade because it broke below the 8. I'm going to let the 15 guide me, because many times a stock that breaks down through the 8 exponential moving average will get to the 15 and bounce back up and then head back up into the original trend. If the price closes below the 15 EMA, momentum is weakening, time to get out. All right, so again, hold the position as long as the EMA stays above the 15 EMA. If the price closes below both or the 8 crosses below the 15, consider it an exit signal. The stock is getting weak. Okay, and here's the bearish counterpart to that. Swing trade. These are swing trades. We're not going to go over these tonight, but this is very good information to have. A bearish setup occurs when the 8 EMA crosses below the 15 EMA showing a downtrend. So the 8 EMA is now below the 15 EMA. This is a bearish environment. So this is a sell the rally setup. Wait for the price to rise back up to the 8 EMA. In other words, the price is rallying up toward the 8 or the 15. Look for rejection candles, shooting stars, bearish engulfing, etc. Something that shows a bearish candle, and then the stock reverses back down again after hitting the 8 or the 15. These are dynamic resistance. This is where you would be entering to go short. Okay, enter when the price closes back below the EMA after testing it from underneath. Comes up through the 8, hits the 15, comes back down through the 8 again. You can get short right there. Above the 15 EMA or recent swing high would be where we would get out if it comes back up to the 15 and breaks through. Okay, and you're going to ride the trend until the 8 EMA crosses back above the 15 EMA or price closes decisively above both. You're going to use your judgment on these trades when they're coming back down again. You don't necessarily have to wait till the 8 crosses back up to the 15. Once the 8 starts to curl back up again, the price is moving up. You probably want to take profits right then. All right? All right, so the EMA here, dynamics and trend behavior, talking about the 8 and 15 EMA. And you can review this after you listen to the webinar, something you kind of want to go over a few times to understand, but it's really important. In strong uptrends, the price often pulls back only to the 8 before it continues up. That would be a PBO to the 8, a pullback to the 8, and then a bounce, right? In moderate uptrends, in other words, not really strong uptrends, but moderate uptrends, the price may dip to the 15 before resuming. In other words, it comes through the 8, hits the 15, and then bounces and heads back up again. And if you've been in my room at all, you know on swing trades, I use this a lot. right? In range or reversal zones, the EMAs will flatten and intertwine, get going up and down, above and below each other. The 815, 815, 815, cross up, cross down, cross up, cross down, signaling to stay out and wait for clarity. You don't have any really good momentum when you're getting that kind of choppiness, right? So be very cautious on those. So this is the kind of setups you can tell whether you get a stronger stock, if it only gets to the 8 and bounces, a moderate if it goes to the 15 but then bounces back up again, and vice versa on the short side, by the way. Okay. All right. So that's the overall information on the 8 and 15 for swing trades and for 5-minute charts for the SPY Super System trades. We're going to look at some charts here on SPY Super System here now. On trades these are some trades I took today. So I'm going to go to the SPY Super System, the live SPY Super System software. So here it is right here. So live chart of today, Friday. Let me move this over. This is a 5-minute chart. You can see, right? And this is the SPY right here. And I traded the SPY twice today on the SPY Super System. So let's go back and look, right? So let's go back and look at the SPY here. All right. So here it is this morning, about 10:30. And you see we had bullishness here, and then we start getting bearishness, and then bullishness. Now we go to bearishness right here. If you look right here, there's the 8, right? The 8 is the white line right here, and the 15 is the green line that turns red. That is the 15. Here's the 8. Here's the VWAP right here. Where can you get into this trade? Well, once the institutions are selling, which you can see right here, they went from blue buying to yellow selling. You can take it anywhere you want to in here. I waited until this broke down below the 8 right here. Once it broke below the 8 and the 15, this is where I took the trade. Right, I took the trade right there on the SPY. And notice that the 15, by the way, is here. And now the 8's coming down through it. This gives you even a higher conviction trade right here as the 8 breaks below the 15 and the price heads down. And I've got pop out of the box signals, which are telling me compression break. But this is where I took the trade when I got below the 15. And then I rode this thing down, and this is where I get out right here. As soon as it started to reverse, I didn't wait for it to go back up. Notice it went up, hit the 8 and rolled over again. All right, so it actually, I could have stayed in the trade, but I get out of it pretty quickly here. But the price was below the VWAP. I take it as it breaks down below the 15 right here, below the 8 and the 15, and then I write it down and I get out for like 4 candles. This was good for I had like 10 contracts in this. This was good for about $700 a contract. Well, $700 altogether, about $70 a contract, about $700 profit on that little move right there. But it's fairly clear to see that the institutions are selling because this is what we're using. There's our 8, right? The white line, it's coming through the VWAP, it's coming through the 15, it's heading down. So that was a short I had on the market, on the SPY today. Now, let's move forward to this afternoon, right? Because this afternoon, I went long on the SPY, right? So I'm looking for the stock price to go, or the indicator here, momentum indicator to go to bullish. It's bearish right here, red, bullish. It goes blue right here, bullish. But see what the stock price is. You've got the 8, which is the white line, and it's crossing up to the 15. That's pretty bullish. But you see what the problem here is? You see the VWAP? That is the resistance level. So it's going to run into the VWAP. So I'm not going to take this until the stock can prove that it can through the VWAP. So I'm watching the 8, and I'm watching the stock come down and ride along the 8, and there's where it breaks through. Breaks through the VWAP right there. Institutions are in. You can see it's green now. I take the trade right there as it breaks through the VWAP, and I ride this thing up for about another $35 or $40 a contract on the SPY right here. Right, so that was another trade I took on the SPY today. But again, here's the 8, here's the 15. You see the 8's trading above the 15. That's bullish. Remember, coming through the VWAP. That's a breakout level. That's a support resistance level. It's very, very easy. And again, I could stay in this thing if I wanted to, as long as the stock stayed above the 8 or above the 15. If you notice here, it came down and see how it broke through the 8, but the 15 held, the 15 held. This is a very telling situation when the stock hits the 15 and stays bullish. You see how it did that? That's why I use these in conjunction with each other, although I get out of the trade back up in here. Okay, so that's on the SPY. Now I also want to take a look at NVIDIA. This was another one today that I traded. And let me just get this chart lined up here. And let's see. This is the end of the day. Let's go back to where I traded NVIDIA. All right, so this is an open on NVIDIA this morning. Gap up, flat, 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 right? Pull back, pull back, pull back. It was bullish. It was green for the day. I wanted to go long on this thing. Where am I going to take it? All right, so I'm looking at the indicators here, and I see I get bullishness here, but I've got the 8 trading below the 15 here, so that's not good, and I'm below the VWAP, so I can't take this thing long, but I'm looking for a long entry. Now, if the 8 moves up through the 15 right here, right, and the stock moves above the VWAP, this is where I took the trade right here. Right, it broke above the VWAP, coming through the 8 with a pop out of the box. Now it just moved sideways. You see how it moved sideways? But notice it held the VWAP and it held the 8 exponential moving average, as well as the 15. I would have held it even if it went down to 15. So I held it, and then I rode this thing up as it rode up along the 8. Bullish, bullish, bullish. Notice right here, bullish all the way, riding this all the way up, and then I get out as soon as it popped down here. I took profits. Now I could have stayed in it because again, it didn't break below the 15. Remember how we use the 8 and 15 in conjunction with each other. Here it broke through the 8, but it bounced off the 15. But I had enough profits here where I took it off. All right. So and here you can see it breaking down below the 15. You definitely would be out there. Okay. So that's NVIDIA. That's another one I took today. I also wanted to look at Google. Right. Google was another one. Let's go back to this morning. Here's the gap up on Google. We had a fairly good gap up this morning. I don't chase these stocks early on, not normally. I wait for them to set up. All right. So I liked it long. And here it's showing some weakness here. Here comes the 8, which is above the 15, so it's bullish, but now the 8 breaks below the 15 and the VWAP. So I'm waiting for a setup to occur. And I find it here. I see the institutions go from selling to buying right here, but it's below the VWAP. Here's where I'm taking it, right here. You see how the price is the 15 right here? See how the 8 is coming up through the 15? The white line through the green line, and the stock breaks above the VWAP. Looks very similar to what we just did with NVIDIA. Here's the trade right there. Institutions are in it. We're in it as it pops from here. I take this from 287 on this up to about 288.50, about $1.50 per contract on calls on Google. That was a beautiful little trade right there. And it still flattens out. But again, I took profits right there because this was a quick intraday trade for me. But I hope you can see how easy this is to identify. When you find them, you can find it breaking above the VWAP, the 8 crossing up through the 15 after the stock has been coming down, but it was bullish on the day. A beautiful trade in Google. Also Palantir, one more. I got a couple more I want to go over, and then we'll call it an evening. But I'm hoping this information you're going to find very useful. All right, so here's Palantir. All right, so Palantir, we go back to the this morning. Right, on Monday. Here's the gap up in Palantir. Very bullish, right? But I'm not going to chase it here. I mean, I could have taken a trade here as it breaks above the view, but I didn't. All right. Now it's coming back down again. Here now it's getting bearish. You see the selling right here, the red. Now it pops up here. So it comes down and it pops right here and it goes green. And where the 8's above the 15, we're bullish. I'm looking for a move above the 8 exponential moving average. So anywhere on these candles, I could take it. Or I could take it. I could wait till this pop out of the box occurs. Tell me I'm breaking out of compression. Take it right there and then just ride it up. And again, as long as it stays above the 8, as long as it stays above the 8 and 15, you can stay in the trade, stay in the trade, stay in the trade. You're out right here because down to the 15, you're out of the trade. That's your trade, right? That's your trade, and it's a decent winning trade. Again, you see how it went from buying to selling right there, right? So that's Palantir. And let's see, I think I had one here. Let me take a look at Whirlpool. I think this was a short one today. I don't think I took it though, but I think it was a setup. All right, so yeah, this was gapping down. This was weak all day long. So you're looking to go short on this, or on Whirlpool. Now you look at the institution selling here. So anywhere in here you can actually take this as it's trading. Here's the 8 right here, all right, and the 15's up here. The 8's below the 15. 8 below the 15 is bearish. It's below the VWAP. This is where you could have taken the trade right here. On a pop out of the box as it cuts down below the 15 and the 8, and stay in it as long as the stock price stays below the 8. Once it goes up and hits the 15 here, I would have been out. But that was another trade off the SPY Super System trade. And I'll show you one other one. This was Sophie, because the market was pretty strong today. This is a Sophie. Let me go back to the morning. All right, here's a gap up on Sophie. Looking to go long this stock. It was very, very bullish. Here's a pullback. Once I get a pullback on a bullish stock, this is where I start to look for an entry. All right, so I'm looking for an entry. It's still selling. We got red and yellow, bearish. Goes to blue. VWAP's right here. I got to get above the VWAP. Gets above the VWAP right here. Look at the 8 right here as the stock breaks above the VWAP. See the institutions buying? See the 8? You see it crossing through the green line? The 8 is crossing through the 15. It's now moved above it, turning this into a bullish trend. The 815 cross like that is very, very impressive, and it works very well. This is where you take the trade right here on Sophie. Now you want us to stay above the 8 and the 15. So it comes in here, you take it, stays above the 8, 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 all the way through here. Notice, didn't even come down and touch the 15. Then once this comes down and starts to weaken a little bit, you would get out. But you could have stayed in this trade, on the Sophie trade, for probably an hour, just following the 8 up here, because it never broke down below close to the 15. It just hit the 8 and stayed on the 8 and kept riding up. That's a pretty long trade right there. Right? That's a pretty long trade. That was good for I don't know, probably an hour and a half, and a pretty good profit on that thing. Right? Of course, he starts to fail here, you get out. But that's what you're looking for. You're looking for that 8 crossing up to the 15 and the price going through the VWAP. That tells you that you've got institutions in there, and the 8's moving up. It's going bullish. It goes above the VWAP. Beautiful entry on that. And you could have taken profits up here if you wanted to, or you could just sit on this as long as it holds the 8 and ride it up a little bit on a trending day. All right, so that's the way to use the SPY Super System with the indicators that we've got. Again, there was a lot of information here. When you get done, I would spend some little time reading about the 8 and 15 in conjunction with one another. This is really, really good information here for this using the 8 and 15 in conjunction with each other for swing trades and for day trades. All right, and the behavior of the 8 and the you can determine a lot by looking at how the 8 and EMA are working with each other. All right, so that's the setups here on the SPY Super System for intraday trades, for 5-minute trades on the SPYs, the Qs, the IWM, any stocks that you want. Again, I've got all the information you need in here that tell you exactly how to trade these. It's not as complicated as it might seem because there's so much information, but I'm trying to find the very best setups and get into those very best setups at the very best spot that you can. Okay, right close to support, right close to resistance, and take profits off of that when you start to fall back to those support and resistance levels. But this works excellently. The win rate on this thing is very high, 85 to 90% win rate, and the profit factor on all the SPY Super System trades I've taken in the last year or so. The profit factor, if you want to know what a profit factor is, are about 4.3. 1.0 profit factor tells you you're breaking even. 2 tells you you're winning twice as much as losing. This has got a 4.3. Very, very high profit factor in these things, but you've got to be very selective. You've got to get them at the right spot, and you've got to be able to get out of them if they turn against you. Again, but that's I think I've covered that pretty clearly here and how we do that. All right, so that's the setup. That's how we trade these things with the SPY Super System. You can buy this software. You can come into my room and get the alert service. We go over these all day long, but this is really, really a great methodology for folks who are trading the SPY Super System on 5-minute charts. We do a lot of swing trades as well, and I did cover a little bit of information on the SPY Super Systems information for the 8 and 15 EMAs on daily charts, but I'm not going to cover that tonight. That would be for swing trades. We'll revisit that at another time. All right, thanks very much for listening. I appreciate it. And again, I'm Dave with the SPY Super System and software, brightlinetrading.com, and you can get into the room You can get into the alert service, you can get the software. Come into the room and we talk about this stuff all day long. I'm on from market open to market close. I'm there all day long except when I eat lunch, and answering questions, and we've got hundreds of people in there. So look forward to seeing some folks in the room here in the next few days. Thanks very much for listening. I appreciate it, and trade well.